Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Tuesday, everybody. First up, we move through developments in US-China relations. The US State Department has confirmed that this Thursday, Wang, China's top diplomat, will visit the US for 3 days. This is likely to pave the way for General Secretary Xi Jinping to attend APEC next month in San Francisco, where he would likely meet with US leader President Biden. The Wall Street Journal writes that also this week, a delegation of Chinese business, cultural and sports figures, like basketball star Yao Ming, is due in New York for a series of public engagements. A group of non-governmental representatives of both nations held 4 hours of virtual talks late last week too, organized by the Asia Society. That's the positive news. On the less optimistic front, in yesterday's video we discussed the escalation of the ongoing resupply efforts of the grounded Sierra Madre at 2nd Thomas Shoal between China and the Philippines with 2 collisions. Manila says that the PRC ships rammed Philippine ships trying to deliver supplies. Beijing says that they were trespassing in Chinese waters. The waterway is disputed by both sides. This is fast becoming a serious crisis, not just diplomatically between Beijing and Manila, but potentially a military one between the United States and China too. Yesterday, the US and Philippines national security advisors held talks to discuss the incident. According to the White House readout, National Security Advisor Jake Sullivan, quote, reiterated U.S. support for our Philippine allies following the PRC Coast Guard and maritime militia's dangerous and unlawful actions on October 22nd, obstructing a routine Philippine resupply to 2nd Thomas Shoal. Mr. Sullivan emphasized the ironclad U.S. alliance commitments to the Philippines under the U.S.-Philippines Mutual Defense Treaty, which extends to armed attacks on Philippine public vessels, aircraft, and armed forces, to include those of its Coast Guard in the Pacific, including in the South China Sea. End quote. In a separate statement on the same day, the United States Department of State reaffirmed its support for its ally, expressing 2nd Thomas Shoal as a feature well within the Philippine Exclusive Economic Zone and on the Philippine continental shelf. Adding, quote, an international tribunal's July 2016 decision, legally binding on both the Philippines and PRC, made clear that there exists no legal basis for any entitlement by China to maritime zones in the area of 2nd Thomas Shoal. The same ruling affirmed that 2nd Thomas Shoal is a low tide elevation outside the territorial sea of another high tide feature. As such, the PRC's territorial claims to it are unfounded. End quote. The other regional power, Japan, has also become quite concerned with all of this too. On Monday, the Japanese Ministry of Foreign Affairs released an official statement expressing, quote, Japan expresses serious concern for actions which increase regional tensions, including a dangerous action that caused a collision between Chinese and Filipino ships on October 22nd. Japan believes that the issue concerning the South China Sea is directly related to the peace and stability of the region and is a legitimate concern of the international community, including Japan. End quote. In response to all of this, on Monday, PRC Foreign Ministry spokesperson Mao Ning said at a regular press event, quote, China deplores and rejects the United States' baseless attacks against China's legitimate and lawful law enforcement activities to safeguard our rights at Ren'aijiao, the Chinese name for 2nd Thomas Shoal. In seeking selfish geopolitical interests, the U.S. has incited, supported, and cooperated with the Philippines in its infringement and provocation at Ren'aijiao. End quote. The previous day, the PRC, through another foreign ministry spokesperson, laid out China's view on the situation. It is important that we note this language as it tells us just how the situation has the potential to explode into a full-blown military crisis. Quote, the Chinese Coast Guard took necessary law enforcement measures. The action it took on the scene was professional and restrained. Ren'aijiao is part of China's territory. The Philippines illegally grounded its warship there. 24 years have passed, and instead of towing it away, the Philippines has sought to repair and reinforce it on a large scale in order to permanently occupy the area. China has shown extraordinary restraint and patience concerning this matter. The Philippines, however, chose to ignore China's goodwill and sincerity and has reneged on its own promise. China once again urges the Philippines to take seriously China's grave concerns for the sake of peace and stability in the South China Sea. End quote. We are about to enter a very dangerous next few months in this region. Quote, Mother Nature has a say in how quickly this becomes a real crisis, as the grounded ship that the Philippines is using to secure its territory may break up before the end of the year. And that is what the PRC is waiting for. Then they will swoop in and declare possession, unless the Philippines can get a lot of concrete and construction materials to the ship soon. The Philippines can't get the material there on its own, and if it asks the US for help, the US will likely have to assist its treaty partner in safeguarding the resupply, which could then turn this into a US-China crisis. End quote. Next up, China's stock market hits historic lows. Hey everyone, you know the drill. If you're getting some value from today's episode, don't forget to hit the like button. Sharing with people who you think would enjoy this sort of content is a big help too. And for anyone who can go the extra mile and help me keep China Update sustainable, free and open to all 6 days a week, Patreon and Buy Me a Coffee links are in the description below. The channel relies primarily on subscribers and viewers like you to keep going. As always, thank you so much everybody for the ongoing support. Next up, Chinese shares have fallen to the lowest level since before the COVID-19 pandemic. Quote, as Beijing's latest efforts to prop up the country's stock market failed to stem off a sell-off driven by slowing economic growth, a liquidity crisis in the property sector, and geopolitical tensions. End quote. In the words of UK-based The Financial Times. This is a story we have been watching for some time now here on China Update. Yesterday, Monday, the CSI 300 index of large and liquid Shanghai and Shenzhen listed stocks fell as much as 1.3% to about 3,463. Marking the equity benchmark's lowest level since 2019. The gauge has fallen about 15% so far this year in dollar terms. The CSI 300 index is now on track for an unprecedented third year of declines. The Shanghai Composite broke through 3,000 on Monday, and now punters are talking about the battle to hold 2,900. China's gauge of tech equities, the Star 50 index, fell to its lowest point since its inception more than 3 years ago. The index, which tracks manufacturers, chip makers, and the biggest companies on the Star board, closed down 2.5% on Monday. The gauge is set for a 6th month of declines. The Financial Times writes that Chinese equities outperformed global markets early in the pandemic and staged a rally at the start of this year on the hopes of a rebound from disruptive zero-COVID policies. We followed this at the time. However, as we also saw, a subsequent slowdown in growth and high-profile defaults on dollar debt by Chinese developers have prompted investors to dump China stocks. Quote, while a string of support measures launched since July by top officials have failed to halt the sell-off. End quote. As regular viewers know, global investors especially have become quite cold on Chinese stocks. According to information provider Wind, international investors have pulled more than $5 billion so far this month from mainland China's yuan-denominated A-share market via trading links with Hong Kong. That has taken their total net sales since August to more than $22 billion. An Asia-based senior capital markets banker at One Wall Street Investment Bank told UK-based Reuters this week, quote, global investors need 2 floors before they get back into China. They need a floor for the geopolitics and a floor for the Chinese economy. Only then can they start pricing things up. End quote. This massive exodus is putting pressure on the yuan too. Over the weekend, China's currency regulator, the State Administration of Foreign Exchange, said onshore banks sold a net $19.4 billion of foreign currencies to their clients last month, the most since November 2018, the height of the US-China trade war. US-based Bloomberg reports that banks also sent a net $53.9 billion overseas on behalf of their customers. Quote, the biggest monthly outflow since January 2016, shortly after policymakers engineered a depreciation of the currency in August 2015. End quote. In a report this week, Goldman Sachs said that net outflows climbed to around $75 billion in September, the most since late 2016, and an almost 80% increase month on month. Regulators appear increasingly nervous about all of this. Chinese sovereign fund Central Huijian Investment said on Monday that it was buying exchange-traded funds, ETFs, and will continue to do so. Earlier this month, it also increased its stakes in China's big banks. However, this likely will not be enough, and without much bigger support from the state, increasing both liquidity and confidence, it does seem likely that these prices will continue to decline. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Tuesday, and I will see you all tomorrow.